Ooh, okay. Hi, Keisha. Cannot hear you, Keisha. I saw Paul made a comment that he could hear me. I'll try and be quiet for the next 4 minutes. Getting a little bit of head count in here. I think Keisha's getting her audio set up.
Hello, NAACP. So it is great to see everyone. Great to hear from everyone. If you can, go ahead in the chat and put where you are located. And we'll get started in about 2 minutes. Really excited today to have Navy Federal Credit Union on to talk to us about what is happening in 2026 and what financial advice we should look forward to. Really excited about tonight. And so again, put yourself in the chat, make sure that you kind of put where you're from, and then we will go from there. Also, if you have questions for Navy Federal, oh, someone just told me the chat is disabled. Why is that? Let's see. Not sure exactly. Oh, it actually does not allow on the webinar feature. So if you all have any questions for Navy Federal, go ahead and put it in the Q&A, and then we'll be able to have the ability to filter those questions for Thomas. So we're going to give it 1 more minute, and then we'll have the ability to start our call and start our financial readiness conversation. If you don't see one of your colleagues on this call, you better tap them, get them on, let them know what's happening. It's a big deal. So we'll start in another minute. And Thomas, are you good? Can you hear me, see me, all the things? Good. Thomas is ready. All right, 1 more minute. All right, well, welcome everyone. Thanks for coming to our economy call at the NAACP. Today, we're going to be talking with our friends at Navy Federal Credit Union. And so if you all are not familiar with this call, what we do is we think about all the things happening with economy, housing, and finance. This is for our members and economy or economic development chairs, housing chairs, labor chairs across the country that have the ability to come in, meet with national staff, and hear from content experts. And so, as you all know, my name is Keisha Bras. I work for the NAACP's national team. I'm the Director for Opportunity, Race, and Justice. I do all of our economy, framework, and policy, along with race, racial equity, and diversity, equity, and inclusion. And I want to give a little bit of background of why Navy Federal. So over a year ago, our Armed Services and Veteran Affairs Committee Chairman, Elder DuBose, or Edward DuBose, I call him Elder DuBose, decided to go ahead and pursue a conversation with Navy Federal around equity and opportunity for Black veterans across the country. And we were so excited when Navy Federal came back and said, we want to do as much championing for racial equity as possible when it comes to our veterans, veterans' families, children of veterans, and all of the things. Navy Federal is a massive organization, as you all know, in the credit union world. And so through the leadership of Pam Perry, the senior vice president, along with myself and Elder DeBose, we were able to come up with a memorandum of understanding. And so now we have a financial education partnership with Navy Federal to bring as much education and how to look at your financial future for the next 2 years. So tonight I am so excited to introduce Tom Racca. Let me go ahead and read his bio. It's pretty impressive. And so he is the manager of personal finance management. He is the manager of personal finance management at Navy Federal Credit Union, where he leads initiatives focused on empowering members through financial education and strategic planning. He holds a bachelor's of arts in psychology from George Mason University and began his career at Navy Federal in 2006, serving in a variety of roles across the organization. After graduating from the Executive Development Program in 2014, Thomas transitioned to his current leadership role, where he combines behavioral insight with financial expertise to support members at all stages of life. His career spans over 20 years, so we're talking to an expert. He is featured on several podcasts, quoted in numerous periodicals, and also commentary in financial preparedness and retirement readiness. And so he is going to be taking us through financial education tonight. Let me give you all the context of why this is important. So number one, if you all don't know, you should know. We have a government shutdown. We have millions of people without jobs. Our inflation is high. Our interest rates are high. Taxes are different. And in addition to that, we are going into a really difficult 2026 when it comes to social issues, food readiness, food opportunity, the ability to pay for bills, and all of the things that are going to impact our members across the country. And so when I met with Navy Federal, my biggest thing was, hey, how can I, more than anything, give our members real-time information they need to prepare for 2026? And Navy Federal said, say less, we got this. So I'm going to turn the call to Thomas. If you all have questions regarding financial readiness or anything, I'll go ahead and filter those questions, and probably towards the end of the call, Thomas will have the ability to answer a few of them. And then we are also excited to be joined by Pam Perry. And so before we turn it to Thomas, I would love to hear from Pam at Navy Federal on her commitment to the NAACP, and again, why this conversation is so timely and important. Pam?
Yeah, thank you very much, Keisha, and thank you everyone for the opportunity to speak with you tonight. Navy Federal Credit Union is really thrilled to partner with the NAACP in providing financial education to your members, many of whom are also our members. As you may know, Navy Federal serves over 15 million Americans, many with an affinity to active duty military service or as veterans. We are very excited about having an opportunity to speak with you tonight. And I think you're in for a real treat. Our very own Thomas Racca, and I know it says under my name that I'm Thomas Racca, but I am Pam Perry. Our very own Thomas Racca, who is an expert in financial management. He serves as the manager of personal finance management, and he has a breadth of experience over 20 years at the credit union, and he leads a team of financial services professionals who provide guidance to consumers such as yourselves in helping them improve their financial wellness. And without further ado, since Thomas is really the main event, as I mentioned, I think you're in for a real treat. And we are open to questions. Just pop them into the Q&A. And with that, Thomas, I'll turn it over to you. Thank you.
Thank you so much, Pam. Good evening, everyone. Let me get my screen share going on here, and I am really excited for the opportunity to talk to everyone tonight. Can y'all see my screen okay?
Yep, you are good to go, Thomas.
Fantastic. I'm not sharing the one with the notes, right?
Click
Just the PowerPoint. That's okay.
click on the next slide. Let me see.
I think we're good. If you
Okay.
just see the cover page, we are good to go. All
Okay.
right. Good evening, everyone. Um, Great intro, both of you. Really appreciate it. So a lot of material to cover tonight, and we are going to do our best here to try and talk through some items with the economy, as well as some things that you can do starting tonight to improve your financial well-being. So let's start out just by talking about today's financial landscape. I think it was said really well at the beginning. We're seeing rising costs. We're seeing evolvement in payment technologies. We're seeing a host of unique economic trends. And it is against the backdrop where today it is so much more important that we stay informed and we be proactive about our finances. Um, Today's environment is creating so many challenges and so many opportunities. We're seeing inflation, we're seeing evolving job markets, but there's new opportunities for ways to manage your money digitally. So tonight we're going to talk about some of the things that are shaping our world right now. Like I said, we're going to discuss some practical strategies to strengthen your own financial foundation. It might be budgeting smarter, it might be maxing out your retirement contributions, it might be discovering tools and resources. But really, my goal is for you to leave here a little bit more confident than when you started, and help you be prepared for whatever's next. Let's start by talking about the current state of the American psyche. Um, we become a nation of pessimists. The growing belief today, more and more frequently, is that hard work no longer guarantees success, um, and that's changed. Recent polling from the Wall Street Journal shows that 70% of Americans say that the American dream, that you work hard, you'll get ahead, it's no longer true. This is the highest level of skepticism we've seen in 15 years. And in fact, today, only 25% of Americans believe that they have a good chance of actually improving their standard of living. This is a record that goes back to 1987, and this pessimism is cutting across political lines, it's cutting across generations, it's cutting across income levels, and it's not just about numbers, it's about our experiences. The truth of the matter is, people feel stuck. They see rising home prices, they see stagnant wages, they see a cost of living that, quite frankly, is outpacing their paychecks. And they're watching their parents retire comfortably, while many individuals are struggling to buy a house, start a business, raise a family. And there's a huge disconnect where we're seeing traditional economic indicators like GDP growth and stock market highs. And there's a huge disconnect between how well those are doing and how people actually feel. In short, the economy looks really strong on paper, but it really doesn't feel that way in our wallets. This whole erosion of faith and upward mobility is becoming really dangerous. It's undermining motivation, civic trust. It's impacting long-term planning, and we are seeing that it truly does affect disproportionately communities of color. Systematic barriers have long made their American dream harder in those areas to reach. So what do we do with this? Um, we have to acknowledge it. We have to talk about it. We need to work to rebuild trust, not just in the economy, but in the systems that surround it. This means financial education, access to credit, affordable housing, and fair wages. It means making sure that hard work really does start to pay off for everybody. You're going to do a quick shift. One of the biggest things that's causing this pessimism, probably the biggest economic stressor we'll see this year, the government shutdown. It's estimated that each week that it continues, we're shaving a tenth of a point off of our GDP. And this is going to have a continued long term drag on economic growth. But it's going way beyond the numbers. In fact, with no new economic data really being reported, policymakers, businesses, financial institutions, we're all operating in a bit of a fog. It's really hard to assess real-time conditions and make informed decisions. And quite frankly, the longer that this goes, The greater the risk of long-term layoffs, we're going to continue to see delayed investments, and it's going to continue to compound uncertainty across a variety of sectors. And two really important dates to keep in mind. Tomorrow is the first full missed paycheck for many federal employees, and the following day, SNAP benefits are going to stop across many states in the country. And another big key indicator that we're seeing right now, and this is just a personal reality for a lot of us, we're seeing a significant bottleneck in today's housing market. Today, 70% of US mortgages have a rate that's under 5%, and that's a historic low. It's creating a huge disincentive for people to move. Homeowners are choosing to stay put, even if they want to move. They're choosing to stay put because if they look to relocate, selling their house means they're going to take on a mortgage interest rate of 6% or higher. And this lock-in effect is slowing housing turnover. It's reducing inventory for people that are trying to get into home ownership, and it's making it harder for first-time buyers to enter the market at all. And we're seeing the impact in local economies. Fewer moves is leading to fewer renovations, fewer real estate transactions, and that's going to lead to all around a reduction in consumer spending tied to relocation. In short, today, the mortgage rate environment is freezing mobility, and that's contributing even more to this broader economic stagnation. All right, so this is going to be our last economic slide, but there's a lot of information to absorb here. We're going to talk about some of the strengths, challenges, and the outlook. Today, the economy is a huge mixed picture, and we talked about it a little bit. GDP growth still solid at 3.8%. It's being driven by resilient consumer spending and a booming stock market that's consistently hitting record highs. We are seeing the Federal Reserve continue to cut interest rates, which should continue to ease borrowing costs and support additional growth. Tax cuts are going to start to kick in, which should give households and businesses a little bit more breathing room. And of course, the AI sector has been on fire. New opportunities reshaping entire industries. But with that, we're seeing some very real challenges. The job market is almost entirely frozen outside of healthcare and AI. This is creating stagnation in a lot of sectors. Inflation is starting to creep back up, which is cutting into our already limited purchasing power. Tariffs are having a negative impact on a lot of key industries, transportation, agriculture, and manufacturing, first and foremost among them. And regardless of the strong consumption data, we are seeing consumer sentiment continue to remain glum. People are worried about affordability, stability, and what's coming next. It's a real dual reality here. We have these strong macro indicators, but there's a weak labor dynamic, and rising costs means we need to come up with some smart and inclusive strategies moving forward. We need to make sure that the economic gains reach all communities, not just those that are in tech and finance. So we need, as a country, to make sure that we're investing in workforce development, protecting our essential industries, and expanding access to financial tools and education. What does all of this mean for 2026? Well, we are forecasting to avoid a recession. We're going to avoid a huge downturn. GDP growth should continue to grow at 1.6, 1.8%, which is cooling, but really it's leading to what you might hear on the news as stagflation-like conditions. Unemployment going to continue right around 4.5%. Inflation right around 3%. This combo suggests persistent price pressures to go alongside some of the labor softness we're seeing. We are forecasting mid-year acceleration. We're looking for growth to pick up in the spring and summer of 2026. And ultimately, that should lead to a little bit of a hiring rebound in the second half of the year. The big takeaway, though, if you don't take anything else away from this slide, it's that K-shaped economy. I think I'm hearing that term more and more frequently now. But for those who have a tailwind right now and they're doing well, that should continue throughout 2026. For those who are lower and moderate income earners right now, you're going to see a little bit of pain continuing into 2026. I'm going to push pause just a quick second. Like I said, closing out the economy part, I want to mention quick plug for Navy Federal here, and for those of you who are impacted by the shutdown, a couple of options that we have available for our members. Two big ones: paycheck assistance program, and a second is a mortgage relief option. So if you're a federal employee that's been impacted, we are offering 0% APR loans, no fees, no credit check, up to $10,000 based on your most recent direct deposit. And if you carry a mortgage with us and you're impacted, we are offering forbearance plans that will temporarily suspend your payment up to 3 months. And this is something that you're going to hear me harp on some of the following slides, but reach out, ask the questions, and see what options are available for you. And just to give you an idea of how popular this has been, during the 2018-19 shutdown, we had 19,000 members, I think, take advantage of this program. And that demand has skyrocketed even more so today. And I think we're seeing 80% of our enrollees are actively tied to our active duty military and reserves. So great opportunity if you fall into that population. All right. Now we're getting a little bit more into my area of expertise. Let's talk a little bit more from the macroeconomic challenges and talk about micro wealth building. Everyday actions that can help you and your families start to build financial resilience even in tough times. First off, small, consistent savings. A lot of people think you need thousands of dollars to get started, and that's just not true. If you can manage to carve out $10 a week, put it into a savings account, that's $500 in a year. That's enough to start an emergency fund, a small investment, or just give you a little bit of a buffer against unexpected expenses. And I can't stress this enough. The key is consistency. Automate it, make it invisible, and let it grow quietly in the background. Second, credit score repair. If any of you on this call today are struggling with a low credit score, let's talk about some things you can do, because a strong credit score is going to open doors. It's going to give you lower interest rates, better loan approvals, more financial flexibility. And if it's gone down a little bit for you, you'll see ads for like credit repair. A lot of folks think that they need to pay someone to fix it. The truth is, most things you can do are do it yourself. So pull your credit report, dispute errors, pay down your balances, and try and keep your utilization low, because that isn't just about the numbers. It really is about creating empowerment. Third, and this is probably the biggest one on this slide, debt management. Debt is probably the biggest barrier to wealth that we see for most folks. In fact, 70% of Americans say that monthly debt is keeping them from saving money or building wealth. And quite frankly, that's a crisis level number. If you find yourself racked in debt, look at the debt snowball, look at the debt avalanche, look at a consolidation loan, or just reach out to your creditors and have a conversation. The earlier you get there, the more options you have. These three pillars, saving, repairing, and managing, these are your foundation. They're especially powerful for our low and moderate income households. You don't need a lot of money to begin, but you do need intention, you do need tools, and you do need support. Credit unions play a very vital role here. Many of us offer financial counseling, secured credit cards, roundup savings program, and educational material. For organizations like the NAACP, this is really where the advocacy can meet action. By promoting access to these tools and encouraging education, we can support community-based solutions to help more individuals take control of their financial future. All right. These next two slides are going to be aimed at slightly different populations. So for our low and moderate income individuals, I can't stress this enough. Financial tools, they're not just conveniences. These are lifelines. They help people manage their day-to-day expenses, prepare for emergencies, and build long-term stability. Some options available to you. My team, as we started at the beginning, personal financial management, we talk to almost 15,000 individuals every month. And we do one-on-one counseling. We offer budgeting support, personalized financial guidance. We go out and we meet people where they are. It could be starting out, it could be facing a hardship, it could be planning for your future. Our goal is to partner with you, be there for you. If you don't want to talk to someone, we have a digital platform. Making Sense. This is free access to budget calculators, debt reduction strategies, investment education, retirement planning tools. These are 24/7. They're available online. They're free to anyone, and they can help you at all stages of life. And it can be tailored to yourself. College planning, military transitions, home ownership. And bear in mind, this financial resilience isn't built overnight. It's built through education, access, and action. One of the most powerful tools that you have is to close the wealth gaps and empower communities is this financial resilience and ongoing education. This is not my area of expertise so much, but we might have some really high earners in the audience. So I want to take just a moment and give some advice to you all as well. For our high earners, when it comes to building and preserving wealth, you all have some very unique opportunities. Let's walk through a few of them. And we'll do our best to share out some of the slides and some of the resources, however we do this after the presentation. But I know there's a lot of material on here. So let's start with tax advantage accounts. Are you maxing out your 401ks, your IRAs, your HSAs? These accounts can all reduce your taxable income and help it grow tax deferred or tax free, depending on the type of account. Um, along that, along those lines, we need to talk about strategic tax efficient investing. So you might have income generating assets, you might have tax deferred accounts, you might be using taxable income for long-term growth investments. It is, sorry about that, jump my slide. So things to consider with your investing are municipal bonds, index funds, and tax loss harvesting, ultimately aimed at reducing your tax burden. If you're a business owner or you have a side hustle, optimize the business structure and how you're getting compensated. Choose the right entity, an LLC, an S Corp, a C Corp. All of these impact how your income is taxed. Structuring your comp to include your retirement contributions, your health benefits, and your equity can really just maximize your tax efficiency. Charitable giving and estate planning are powerful tools, not just for your legacy, but for your tax strategy year to year. Consider donating your appreciated assets, using donor advised funds, or setting up trusts to reduce your taxable income and support causes that matter. And don't overlook expense management. This is for everyone in the audience. High earners have more of a tendency to lose money through lifestyle creep. So be sure you're tracking your spending, you're looking at your recurring costs, and you're using budgeting tools to stay intentional about where your money's going. Wealth isn't just about how much you make, it's about how much you keep. And then lastly, leverage your employer benefits and professional guidance. If you have access to legal or financial counseling, wellness stipends, compensation plans, stock options, use all of them. Work with a financial advisor, a tax professional, and a state attorney to build a coordinated plan. This is how you start to stack wins and create financial freedom and build a legacy that's going to last. All right. If you take nothing else out of this presentation tonight, regardless of where you're at on the income scale. Recognize that budgeting is the foundation of your financial control. It's so important to know exactly how much money you have coming in and how much you have going out. Everything that we talked about on the previous slides, anything that we talk about on the slides moving forward, they don't mean a thing if you don't know what your numbers are. So, step one, if you haven't done it already, sit down, pen and paper, write down your income and every expense. Start with your essentials: housing, utilities, food, and transportation. Once you cover the basics, start to set limits on the discretionary spending: dining out, entertainment, subscription services. If you need a simple rule, 50-30-20. 50% to needs, 30% to wants, 20% to savings and paying down debt. Um, use tools as much as you can to make it easier. We talked a little bit at the beginning about different tools and budgeting things you can automate. Um, use those. Put them on your phone. Set alerts for overspending. All of these small steps, like planning meals, grocery pickups, paying bills on payday, whatever works for you, these start to stack and make a big difference. The goal here is not perfection, it's awareness and it's consistency. When you know where your money goes, it leads you to make better financial decisions, reduce stress, and start building towards long term financial security. All right, this is my favorite slide. I get asked about this in interviews and podcasts more than any other material. And it's stuff that you can do today from the comfort of your own home to improve your financial situation. Um, First off, start with your subscriptions. How many streaming services do you have? You don't need Netflix, Hulu, Disney Plus, and Max all month, every month. Pick what you're going to binge watch, cancel every other service that month. That's going to put 30 to 50 bucks a month or more back in your pocket without missing a beat. Second, take a look at your car insurance. Rates vary widely. Shop around, take some time, do a little bit of legwork, and that can save you a bunch of money. Again, immediately. While you're at it, while you're shopping around, check your internet and your cell phone plans. Loyalty does not always pay. In fact, this is probably most applicable in the telecom industry. Many providers offer new customer discounts, prepaid options, bundles that can cut your bill in half. A lot of people think grocery pickup. There's kind of a misconception that it's more expensive, and it's not. Not only is it convenient and save you time, it avoids those impulse buys, especially walking around with small kids, pointing to what they want, things down at their eye level. This is so important. You shop online, you stick to your list. That's real savings every week. And then finally, look for free events in your community: parks, libraries, local festivals. There's so many opportunities for entertainment that don't come with a high price tag. Plan a picnic with your family, host a game night with your friends. Recognize that having fun doesn't have to be expensive. Now, some of these seem like really small steps, but when it comes to building wealth, consistency beats intensity. I'm going to say that one more time because it's really important. Consistency beats intensity. Modest financial actions repeated over time have extraordinary outcomes. 25 bucks a week doesn't sound like a lot of money to save. Over 10 years, that's $13,000 on its own before interest. You add in compound interest, sometimes called the eighth wonder of the world, the process of earning interest, not just on what you've saved, but on the interest that you've already earned, really starts to stack the savings account. $100 a month at 6% annual growth, 10 years, $18,000. 20 years, 55,000. 30 years, $160,000. The key is starting early and staying consistent. Time is your greatest asset. Even if you begin with small amounts, The more money you have, the more compounds and the greater your financial security. This doesn't just apply to investing, this applies to debt as well. If you're in debt, paying a little bit extra every month on your loans or credit cards can save you thousands over the length of a loan. All of these things, slowly building a safety net, this all contributes to that micro wealth building. It's shifting the conversation from macroeconomic challenges to everyday actions that can help you build resilience. Um, we see it firsthand every day how these small, consistent steps with our members, automating expenses, rounding up purchases, it all leads to building long term stability. This isn't just personal, it creates generational habits. When you pass them down, it helps your family build wealth that lasts. This is why the financial education and access matter. When you understand how this stuff works, you're able to take more control of your future. All right, I'm on my last two slides. If you're scoring at home and waiting for me to wrap up. So these are important things that you really need to have the tools in your tool belt to be sure you have a well-rounded understanding of your finances. Credit score. It's a financial report card. Low is 300, max is 850. Higher scores give you better chance for loans, housing, and even jobs. Okay. You get a free annual report every year from Equifax, Experian, and TransUnion at annualcreditreport.com. If you haven't done it, you should really get a copy of that today and know where your numbers stand. I'm going to give you a great microcosm. Most of you have probably bought a vehicle at some point. You walk into a dealership, you fall in love with the new car, they ask what you can afford. You don't say 20 grand, you say 400 bucks a month, 300 bucks a month, whatever it is. It's a lot higher than the last time I bought my own car, my last car. They're going to work that term without talking about the interest rate, without talking about the length of the loan. Frequently, we see it all the time. And 6 months after you get that car, that new car smell is worn off. That excitement, now it's just a vehicle to get you from A to B. But that loan can stay with you for years. Just to give you an idea of some round numbers, a $20,000 car note at 6%, that's going to cost you $3,200 in interest. You crank it up just a little bit to 9%, you're talking over $5,200. Always look at the documentation for APRs. It's going to include your interest and your fees. Make sure there's no prepayment or penalties or origination fees. Know whether a loan is secured or unsecured. Bottom line, know your numbers, understand your loan terms, and never, ever, ever, ever sign something until you're sure. Okay. Home stretch. It's a lot of predatory lenders out there today. And quite frankly, they target people who are vulnerable. That's where they make their money. It is expensive to be poor in this country. Those with limited access to credit, low income, and urgent needs get promised a lot with quick solutions, and it often leads to long term harm. The most obvious example is payday loans. These are some of the most dangerous things you can get involved in. They offer fast cash, but they come with sky high interest rates. I've seen them over 300% on more than one occasion. This creates a cycle of debt, renews your loans. You're every 2 weeks you're heading back in there, and you're never reducing the principal. I've seen it go on for years and never move the original $500 amount. And buy now, pay later. There's kind of a new service, and it's not all bad. There's some really good opportunities with points and whatnot for the buy now, pay later space, but it might seem harmless, but it can encourage overspending. And if it leads to missed payments, that pay no interest on this account really starts to stack late fees and can eventually damage your credit. They aren't governed the way traditional lenders are. So make sure whenever you're looking at taking out a loan of any sort, that you're working with a traditional lender as much as you can. Make sure that the loan terms are transparent. If you see things like balloon payments or hidden fees, or especially aggressive sales tactics, walk away. If someone won't explain the terms of a loan, walk away, run away. Use trusted institutions. Obviously, I love credit unions, but you're looking for transparent terms, financial education, member focused services. Ask questions, take your time, never sign up for something you don't fully understand. This financial empowerment really starts with awareness. And the more you know, the better choices that you're going to be able to make. All right. I'm going to stop. I'm going to stop there. That was a lot of material.
So, Thomas, I agreed with everything.
Excellent.
But
My work here is done.
only one streaming service? So how I cannot watch House of Dragons and Love is Blind on Netflix. So I just want to say it's the only thing I challenge you on, Thomas, is I need more than one streaming service.
I love the feedback. You know what I would tell you? Unless you're actively involved in discussions every Monday on the Game of Thrones, wait till the whole season drops, watch it all at once.
Okay. Fair, because I do feel like the seasons are pretty long. Anyway, so Thomas, we do have a couple questions. I also want to note to folks, I know some of you have sent out personal forbearance questions. And in that, Pam has done a phenomenal job and I have answered in. You really do need to call Navy Federal or your current financial institution. So as we know in government shutdown, there are multiple credit unions and banks that are providing forbearance. If you don't know what forbearance is, it's an ability to kind of delay payment on your mortgage. And so I know that Pam and Thomas cannot answer direct forbearance questions at the moment because it really has to go through a process, right? So a couple questions for you, Thomas, that folks have been asking is, can anyone join Navy Federal, or how does Navy Federal membership work? And then the second question for you and Pam are, can you give us a little bit more information about that particular product that you guys mentioned around, the way that we can get, I guess, financial stimulus, if that makes sense. So I'm going to turn it to you all to answer those two questions.
Sure. First off, can anyone join? Not anyone, but most people. If your family member is a member, you're eligible. If your family member served in the military, you're eligible. If you go to NavyFederal.org, there is a little button that says, "Am I eligible?" Or it'll give you a phone number you can call, and someone will check for you if you're eligible. And I don't remember the exact numbers, but it's most of America is eligible in one way or another. And then how would they take advantage of that? If you are a member, if you have your direct deposit with us, and if you are impacted by the government shutdown, then you are eligible for that 0%, essentially pay advance while your checks aren't necessarily coming through. And that the way it works, kind of keep it simple and transparent. It's a loan, and then when the shutdown is done, and when the back pay comes in, that repays the 0% loan. It's pretty straightforward. It's pretty cut and dry, but it has led to huge financial security for a lot of our members.
So Thomas, another question was, and I answered it, but I'd love to hear your viewpoint and Pam's viewpoint is, well, the economy is crazy. So should I sell my home and rent? My advice was, we want to keep generational wealth as close as possible. But what are your thoughts on, hey, the economy's crazy. I don't want to own a home. I just want to go rent because they'll fix everything. Give me your thoughts for you and Pam, especially when we know Black and brown people are 4 times removed from generational wealth in regards to home ownership. I'd love to hear your opinions on giving some of that advice.
This is an awesome question. I actually I spend a lot of time talking to my best friend about this exact strategy. Trying to time the market for when a price is going to come down is almost impossible. Um, we've had some really robust discussions on it. And I will say homeownership statistically is far and away the most consistent, easiest path to generational wealth in America. You might you might strike it rich, you might hit the lottery, you might inherit a bunch of money from your aunt you didn't know you had, but statistically, home ownership generates real wealth. Um, and it's if you're in a home, if you own and you have a mortgage and you can afford it, especially if it's sub 5%, um, you have something at the end of 12 months. You trade it out and you rent. What do you have 12 months later? If you're timing the market properly, you're golden. Love that. But if Warren Buffett doesn't try to time things, I don't suggest the average American do it either. Pam, did you want to piggyback on that? You look like you
I
had
love
thoughts.
that answer, but that is such a strong answer. And I continue to tell people, and Pam, I don't mean to cut you off. I know you are the expert of all experts, but when folks say, well, rates are at 8%, and I said, that is the average. 2% and 3% is not normal. That is not normal. That's after a decline of a natural disaster COVID phenomenon, right? So 7%, 8%, that's actually the normal when we look at other than subprime. And so, Pam, I'd love to hear your thoughts because I've continued to encourage people where they think maybe 2% is normal. It's not. 8%, 9% is normal. And really in the 80s, Pam, I know you're 21, so I'm not going to imply you know the 80s, but in the 80s, we definitely had interest rates close to 12% and 13%. And so I'd love to hear your thoughts on generational wealth, but also what advice you give folks to say, is now the right time to buy a home? And should I put this off because of what's happening in the economy? I'd love to hear your thoughts too.
So, from my perspective, the right time to buy a home is when you believe that you can sustainably afford to pay your mortgage. And what I like to say as I think about homeownership, and I should have said this at the outset, but I was kind of late joining. I have the privilege of serving as the Senior Vice President of Financial Opportunity at Navy Federal Credit Union. And my mission is to help our members achieve financial success, have financial dignity on their journeys, and achieve their financial goals that often includes owning a home. If you can afford to own a home, you are paying your mortgage as opposed to if you're renting, you're paying somebody else's mortgage. You're either paying a corporation's mortgage on a building or you're paying a landlord who owns that property, you're paying his or her mortgage. Far better in terms of growing wealth for your family and for our community, for you to have a home when and if you can sustainably afford to maintain that mortgage payment so that you're successful in retaining that home. One of the things that we strive to do is we strive to um, help lower wealth individuals achieve homeownership. And I view it as the elevator, as the escalator theory. You get into homeownership at the size of home and the price of home that you can afford as soon as you can afford. And you just ride that escalator throughout your adult life. You may be able to afford a larger home at some point in the future. You may be able to refinance into a lower mortgage rate at some point in the future. You may be able to extract equity out of that home to pay for your children's education or to weather some other storm or priorities for your family. But if you have an opportunity and you have achieved a level of credit worthiness and financial stability that you can afford a home, it is an incredible wealth building vehicle.
The next question, and Thomas, the next question that came in, I think is really great. So part of what the NAACP's mission is to continue to support MDIs, minority depository institutions, right? We're a huge proponent of it, including CDFIs, community development financial institutions. This is my nerd moment because I am CDFI certified and I did all the things and I love CDFIs. Tell me how Navy Federal is working with MDI. I know you all are a credit union, and I think for the folks on the call, it's really important that we determine that not all credit unions are CDFIs and not all credit unions are MDIs. But I would love to know, Pam, and I think this is, and Thomas, not to cut you out, this is a Pam question. How are you all working with MDIs and CDFIs? And I think the direct question is, how can I work through my current MDI or CDFI to get to Navy Federal?
Okay, I will try to tackle that question. I will say
It's not an easy question. I'm sorry, Pam.
no, it's not, but it is
Okay.
important. It is important to note, and it's important to Navy Federal. We're the largest credit union in the world. The country has so many credit unions that are in so many communities serving the needs of families who are often underserved by banks and other financial services companies. And because of that, we really believe in the credit union movement, and Navy Federal strives to serve not just our own members, and we're not just aiming to achieve greater success and expansion for Navy Federal Credit Union, but to really spread awareness about credit unions in general and the credit union movement. And one of the ways in which we do so is we are members of an organization called the African American Credit Union Coalition. And we are one of the founders of the African American Credit Union Coalition's Future Fund that is aimed at supporting smaller credit unions, many of whom are minority depository institutions. And so through the AACUC, we provide technical support to smaller credit unions. We provide educational opportunities for their leaders so that they can be successful in serving the communities that their credit unions serve. So I think that's a partial answer to the question, but it is part of our demonstration of our commitment to the success of the credit union industry, including some credit unions that may serve your communities even more so than we do. One other thing I wanted to follow back on was there was a question about membership in the Navy Federal Credit Union.
Yeah, please, Pam.
So we assess our eligible field of membership, as we refer to it. We talked about being a member of the military or a veteran or friends and family of the military. And we estimate that roughly half of the adult Americans of this country are eligible for membership in Navy Federal Credit Union. And while we'd love to have you, we also support you joining a credit union. If there's another one with whom you have an affinity or that has branches in your community, by all means, we encourage membership in credit unions because credit unions are not for profit and they are there to serve their membership.
So I have two questions left, and I think these are great questions because I think Navy Federal is doing an awesome job. So Thomas and Pam, can you go through what forbearance is? So we've actually had a lot of questions in. I know that I'm struggling. I don't even know what forbearance is. And I can answer that question, but I think it's way better for you all to answer. What is forbearance?
I'll give you a shorter, simple answer, and if we need to expound on it, we can. But basically, you would take the 1, 2, 3 months that you're impacted, take those mortgage payments, more or less, put them at the back end of the loan,
Right.
and allow you to pick up normal payments without being reported delinquent to the credit bureau, without having to come up with 3 months of payment right now, as we don't know how long
Real
this is
quick,
going to go on.
have a specific? So I know like natural disaster, fires in California. Does there a particular reason where someone would have forbearance? I just wanted to add that too, so folks know forbearance
Sure,
can actually be multiple things.
absolutely. Big during COVID,
Yeah,
lot of forbearance in that like 18-month, 24-month time frame. And you'll see it a lot with areas that FEMA declares a disaster area.
right.
So, right, you hit the nail on the head. A hurricane, a wildfire, whatever the case may be, entire zip codes will end up qualifying and be eligible for this. So whoever your mortgage holder is, and I don't know a whole lot on how it works with rent, forbearance is specifically aimed from as a loss mitigation tool, a member assistance or client customer assistance to allow you to remain in your home and not have a tremendous financial impact for something that was out of your control. Um, I'll pick it up. We're also offering extensions, modifications to loans and credit cards within Navy Fed. That's another thing that there's been a lot of uptake with. So your credit cards, your car notes, whatever the case may be, we've had tens of thousands of members coming through and working those accounts as well. If you've ever had a due date moved on your car loan, it's very similar that a forbearance is the same on your mortgage. It's a little more involved. Obviously, you're generally talking bigger numbers, but fundamentally, it takes what's due and puts it on the back end of the loan.
So what I'm going to say about forbearance, and I think this has a great way to end our call, is every financial institution is different. Every credit union is different. The NAACP continues to support as much policy and advocacy around giving the best opportunities for Black and Brown people across the country. And so the last I want to know, and it's 7:55, so I'm going to turn this to Pam. It's two statements, but does Navy Federal do green lending programs for green projects? And the reason I'm asking this question is I am one center. I mean, economy, racial equity, and diversity, equity, inclusion. But my colleague, who's a very close friend of mine, does environmental and climate justice. And we know the EPA has been attacked. We know that the way that we look at green and all the things have been attacked. So Pam, one of our members have asked, do you all do green lending? And if you don't, where is the best way they can go?
So you've
I'll
actually,
jump in, having worked in lending, Pam. Not to jump over you. If you want to take it, you
no,
certainly can.
Don't jump
no,
over Pam, Thomas. Oh,
no, I do not feel as if he's jumping over me. He's an
I
expert.
was
You
like,
go ahead,
Thomas.
Thomas.
I have worked in lending for a really long time, and I have never come across a specific green initiative. We have members they have business
Yeah.
loans that go across a variety of fields. Navy Federal, as a rule, is really big into the green initiative. I think we're LED, LEED. We have a lot of acronyms, but we have all the energy certifications. But I don't know that we have something specifically aimed um, at an environmental loan. I will say to the credit union membership, and we talked about some like just easy things you can do. Um, Back of the envelope numbers, I think we average Navy Federal, and this will be consistent with credit unions, but Navy Federal specifically, we end up returning about $450 million a year in givebacks to our members in terms of higher returns and lower interest rates. And that comes out to about $461 per member per year just by being a member with us. Outside of all the other cool stuff we talked about, it's a great way to put a few $100 back in your pocket. And if you have if you're a member and you have a business that's aimed around that, we certainly have business loans. But I don't think yeah, I don't think that we actively engage in lending in that space, at least not as a target audience.
Yeah, so just so you all know, green lending is a way for credit unions, banks, unregulated loan funds, any private investment to look at a way we look at positive environmental impact. And so part of the EPA's greenhouse gas reduction fund was to provide MDIs and credit unions across the country with particular funds that would be specific to solar panels and efficiency and all of things, particularly in low and marginalized income areas. But as we've known with the EPA and the administration change, that's not a thing. So I feel like, so why say that and giggling? Because I don't think it's right, but want to make clear that we're dealing with an administration change. And so if you all have direct questions around EPA, all of the greenhouse gas reduction, green lending, all of those things, please direct it towards me. I'm going to go ahead and put my email in the chat because I can send that to our environmental and climate director, Abray Connor, who is specialized. She's also an environmental attorney and does this all day, every day. And I support her when it comes to federal funds. So I'm going to go ahead and put my email in the chat. So Pam, Thomas, thank you so much. This was amazing. I have gotten so much great information. Also, someone in the chat, Thomas, said, just use an Amazon stick. Thomas, you can get all the streaming. So someone solved your problem.
Wow, that just cut out like 5 minutes of my presentation. Thank you for that.
Thank you,
But
right?
it's my favorite soundbite.
Right, exactly. Like use an Amazon stick. So Pam and Thomas, any final remarks? I know it's 8 o'clock. We have to hop off, but would love to just get any final remarks from Navy Federal. And please, if you all have any Navy Federal questions, forbearance, credit, I know I got a lot of that. Please just go to their direct contact and website in order to get that information in real time. But anything else I can help?
No, I'll let you
Really
have
just
the word. Thank you very much for having us.
Yeah, great. Thomas, anything else?
no, I was going to say the exact
All
same thing. It
right.
was a pleasure. Thank you all.
Thanks. Well, it's 8:01. I will go ahead and send this recording out to everyone that participated. I will go also ahead and put out the 1-800 number for Navy Federal if you all have any direct questions. Other than that, thank you so much for coming to our Inclusive Economy call. We were so excited to have Navy Federal as a partner, and you all have a great night. It's 8:01. I'm putting my kiddos to bed, and I'm watching Love is Blind reunion. That's what I'm doing.
Solid plan. Have a
All
great
right,
night,
all in the
y'all.
plan. All right, thanks everyone. Have a great night.
Bye.